the Business of Business podcast. In episode 1, we talked to Doxey. She is a procure-to-pay, financial close and internal controls expert. Chris has published 2 books, The Fast Close Toolkit and The Internal Controls Toolkit. Both are published through Wiley and are available now. Enjoy.
Well, welcome everybody. Thank you very much for taking the time to join me today. My name is Lewis Hopkins and I'm the host for these podcasts, The Business of Business. In 1970, Milton Friedman stated that the only social responsibility of business was to maximize profits. With profit, everything else could be achieved, including social responsibility, charitable giving, and all the other desires of the organization. I think today, though, we could probably better argue that the business of business is to have a broader set of goals. Can we only be socially responsible if we are making a profit, or can we do both at the same time? And what really is a social responsibility? For me, it's not just the charitable work that an organization does, but how it benefits those externally and internally. How does it treat everyone? What is the culture that it creates? So I want to focus on the actual business of business, how we are working to achieve the objectives of our organizations in finance, HR, supply chain, and more. How is technology impacting our workplace, both in terms of progress, but also how it affects us as human beings? What are the risks, legislation, and compliance issues that have to be tackled? We have the upcoming Consumer Protection Act in California. How are these pieces of legislation going to affect us going forward? What makes for a good culture? What makes for a bad culture? I have a lot of questions, and so I made this as much for me as for anyone else listening. Now, I take in a ton of content on entrepreneurialism. There's loads of it out there. But what about the day-to-day issues in work, in our 40-hour work weeks? And what about those who have no desire to be an entrepreneur, but want to be the best they can be in HR, finance, and so on? And so for me, the business of business is all of this. And the profit of this podcast is in the learning. My first guest is Chris Doxey, and despite this being the first podcast, we're actually going to start at the end, financial close. It's December 2019, and for many organizations, you'll be looking to close the books. And we have some other things that we're going to go over, procure to pay, internal controls. Chris has some great insights and some fantastic experience in the field. And so with that, I hope you enjoy this. Thank you much again for listening. Let's get on with the show.
My name is Chris Doxey, and I have a consulting company called Doxey Incorporated. And the company started in 2012, and we focus on internal controls, segregation of duties, delegation of authority, and really using my experience at Hewlett-Packard, about 25 years at all the legacy companies that became Hewlett-Packard as it is today, which include Compaq and Digital Equipment Corporation. I have experience as a controller, head of financial architecture at Compaq, and was really instrumental in all the work that was done to merge all the companies. I spent a couple years at WorldCom MCI getting them ready for Sarbanes-Oxley and implementing internal control programs. I've written a couple books. One is called The Internal Controls Toolkit, which was published in July of 2019. And the Fast Close Toolkit is actually being shipped as we speak. Yeah. And I'm actually going to be producing another series of toolkits next year, one called the Controller's Toolkit and one focused on accounts payable.
Cool. Okay. There's quite a few things I'm going to touch on around the books and so on. But from your LinkedIn profile, you have a lot of acronyms after your name. I just focused on a couple. You're certified in control self-assessment, certified internal controls auditor, but you're also on the board with the Institute for Internal Controls, right? So what does that entail?
Yeah, that program or that organization is looking to set up some educational content and a resource center for internal controls professionals to go to. And they actually are looking at revamping their certification program. And again, the focus is on new trends and internal controls, particularly with automation of processes.
Yeah.
And I've been actually on the board for quite a few years. And what we really do is focus on how we can increase our membership and, as I said, increase the quality of the resources that the Institute of Internal Controls offers. It is a worldwide organization, and I believe there's probably about 10,000 or so members.
Okay. And so you've also been involved with something called the Exchange Summit, which, from what I understand, is around procure to pay. Is that correct?
Yes, it is. The focus of the Exchange Summit is really on the best practices for e-invoicing, and it's a worldwide organization again, and what they have are a couple of key conferences each year, and they bring people together from all over the world to talk about trends in electronic invoicing, and they're starting to look at the entire procure-to-pay cycle, as you mentioned, to include not only the procurement side, but actually the accounts payable and payment side. And it's very interesting because the attendees and members of the organization, and again, the attendees of the conferences, get to see what other countries are doing. And it makes things a lot easier because this is a mandate in many countries outside the U.S. And the U.S. is kind of a laggard with e-invoicing, but there are some things happening within the next couple of years. Hopefully, we'll come up with some standards for allowing companies to send and receive electronic invoices. So it's very interesting. It's been an evolution.
Yeah, and it's interesting you said that the US lags behind, because you see so much about certainly payment automation and that kind of thing. So you would say that then it's not a particularly mature process here in the US then?
I think the major problem is that there are several definitions of electronic invoicing. As an example, some companies think because they're sending an invoice with an email, it could be a PDF file or even an Excel spreadsheet, that is equal to an electronic invoice.
Yeah.
So that's one of the key things is a lack of understanding. And again, there are many different conventions for actually sending invoices. We have a lot of solution providers that accommodate that process. And many large companies have been using e-invoicing with EDI processes for years. Yeah. And that connects directly to their ERP system. But the problem with all these kind of ad hoc solutions is you have a different format, and it makes it kind of difficult for the receiver of the invoice to process all these invoices and it makes things very complex.
Okay.
So I think, the short answer is the definitions need to be cleaned up quite a bit, and also the file layouts and the conventions and tools that are going to be used across the board for e-invoicing really need to be defined. Yeah. And probably the third problem is having a consistent methodology for governance where e-invoicing is accepted across the board, and having possibly a large company as a sponsor and as a user of e-invoicing and kind of helping to lead the charge across the board.
Yeah. Okay. That's interesting. I'd always figured that it was a lot more mature here. But so the Exchange Summit, then, what you're trying to do is kind of produce a standard, right?
Yes, we're trying to come up with a standard, and what's helpful, as I mentioned, many countries are utilizing e-invoicing, and there were some governance bodies like PEPL actually in Europe, and pretty much across all of Europe that has been working with the U.S. to share their conventions and their governance. Yeah. And e-invoices is starting to be a common practice also in Asia. So Europe, Asia, Latin America are really quite familiar with e-invoicing. And there's a report that's prepared every year or so by an individual named Bruno Koch, and he's based in Germany, and he takes a look at kind of the landscape of where we are across the world with e-invoicing, and he's also on the advisory board for the Exchange Summit and a key speaker at some of our sessions.
Okay.
Yeah, so he kind of takes a look at where we are with e-invoicing, and where I kind of get involved in, looking at my background with internal controls. If we're automating transactions like invoices, like payments, it's reducing the risk, and it's really facilitating good risk management processes, because we have less chances of duplicate payment, either intentional or erroneous. And we're looking at fewer people being involved, with less chance for modifying invoices and possibly diverting an invoice to a phony supplier and things like that. So that's really kind of the win-win. It's certainly a cost reduction, efficiency gain, but it's really helping the entire internal controls landscape in the P2P process.
Yeah, so because you touched on something there, which is the risk, and particularly around fraud. But I suppose, putting fraud aside, having an efficient procure-to-pay process is ultimately going to make things more efficient, right?
Yes, it is. And looking at the end-to-end process, I've done several presentations on digitizing the procure-to-pay process, starting with electronic procurement through e-invoicing to even electronic accounting, where we're starting to actually do some self-assessments and really automate the accounting process, including internal controls. And if we look at the entire procure-to-pay process, there's so many manual steps, and e-invoicing is a cog in the wheel, I guess, as a best way to describe it. And if you just automate or implement e-invoicing, you're really not looking at the entire process. So you could have risk in the supplier onboarding process, the supplier selection process. And when I think of procure-to-pay, I look at, again, the end-to-end right through closing the books.
Yeah.
And the benefit with an electronic P2P process is you're going to have a good fiscal close, and your transactions are going to be very sound. And, again, the risk is with putting in a digitized process is doing it correctly and really understanding your current process and what needs to change. And if you automate a bad process, you're going to end up with bad results.
Yeah. Okay, so that's a good point there on procure to pay. It's December here, 2019. You've just brought out a book on the Fast Close Toolkit. So, as I say, we're here December. People are going to start thinking about year end if they haven't already. Could you talk a little bit more about the toolkit? Why did you write it? What is it trying to achieve? And what is a fast close, I suppose?
That's a great question. I'd like to, as I mentioned, share my experience over the years with others, because I've picked up so many different tools and techniques. It really makes a lot of sense to communicate and share those types of tools. It all started when I was heading the consolidation process at Digital Equipment Corporation, and I've always looked at looking at processes more efficient and really streamlining the time it takes to close the books. And again, the process was very manual. At that time, we had 38 different general ledgers that needed to be consolidated. Wow. And we actually implemented financial management centers to streamline the consolidation points. And that was really a huge undertaking, but it resulted in taking almost 3 days out of the close. And it continued to be enhanced, or the close process continued to be enhanced with new automation and implementing ERPs and different reporting tools and things like that. Yeah. Because at the time I was in the closing process, we just had legacy systems, and it made it a lot of fun. Yeah. So the toolkit is really an evolution of a lot of the checklists that I found, that are helpful to controllers and individuals that own the financial close. And another key, I guess, milestone and why I wrote the book, I did a survey for the Institute of Finance and Management a few years back. And we did a survey with controllers of small to medium-sized companies. And we looked at what are your key pain points.
Yeah.
And it was very interesting because one of the key pain points was getting back to basics and implementing some checklists. And again, a lot of companies wanted automation, but if we looked at the top 3 priorities, they were checklists, they were getting a streamlined process, and then automation, of course, was one of the factors.
Yeah.
And I started doing a lot of webinars on this topic, the internal control or the fast close process, and I've actually do a lot of work with CPA Academy as well as other CPA organizations,
Right.
and the feedback has been tremendous because they want to see all these checklists and tools. We have them for very detailed transactions up through what the executive close needs to look like.
Right.
And of course, part of the book includes what internal controls you should look at to basically take a peek at your operation to see how well things are connecting. And then the other part of the internal controls is a series of metrics to look at whether there's an indicator for financial statement fraud.
Right. Okay. We talked about the maturity of procure to pay. Closing is something that everybody has to do. So, I mean, from your experience, how mature are the organizations that you've worked with? Like I say, it's something they've got to do, but do you find that organizations are pretty efficient at closing the books, or is it still really painful for them?
It's pretty painful in a lot of cases because there's so much time spent on the close because you're consolidating and gathering all your transactions. And again, if you're looking at manual processes, it's quite cumbersome to make sure that you're posting transactions correctly and efficiently. And a lot of companies, quite honestly, will just wait until the last minute to realize that, oh, gee, we have to close the books this month.
Yeah.
And so what I recommend are doing things like accruals, estimates, and actually determining how much work you can actually move out of the closing crunch. How many journal entries can you automate and upload to your ERP and not wait to the last minute to produce all those? And if you're doing work like that up front, you can actually embed workflow with approvals to make sure that the transactions are reasonable.
Yeah.
And so those are some of the things we actually recommend. And again, part of it is make sure you document your closing process and include a lot of these checklists, which certainly are very useful to include in documentation.
Yeah.
The other key process is to have a post-close review. And, again, if there's a bottleneck, it's usually going to be the same thing over and over again.
Yeah.
And that post-close review should include your finance organization and also the stakeholders and business partners that impact the process. And, again, you're gathering information about inventory from supply chain and other organizations, and you want to make sure that they understand the importance of the close and the impact they have upon it.
Yeah.
So just putting in some basics and then thinking about, okay, automation and including workflow. And I love process analysis, and if you really think about it, every process in finance and even outside finance in a company has a very distinct process flow.
Yeah.
And even getting some of my clients to think about all the steps in their closing process is sometimes difficult because they just see their little piece of the pie, so to speak, and needing to understand, again, the end-to-end process.
Yeah.
That's a skill I learned when I was an auditor, and really looking at all right, we have maybe some problems in a process, but what's causing them? Looking at, auditing techniques as well as root cause analysis.
Okay. So you talked there about companies leaving it till the last minute. When is a good time to start financial close? Because some people might argue, our year end, we're taking transactions right up until the end of the year. We've got this project on, we've got Thanksgiving, from experience, when is a good time to start? Or is it something that, if you have good processes in place, it should be easy to do last minute?
Yep, that's right. If you have some, good process documentation and I guess the discipline, you can actually start gathering the information. So if you don't want to wait until December 31st to figure out, okay, my accounts haven't been reconciled in 6 months.
Yeah.
So there's probably, a whole series of kind of where are you in the close, and one of them is to make sure your accounts are all reconciled, and that means you just don't report a variance, but you look at what is causing that variance and what plans do I have in place to rectify it. And the other key part is if you're doing a post-close review, you can look at what problems did I face during the year, and how can I take a look at those now, again, the beginning of December, to make sure that they're not going to hit me at the end of the year. And there are other, again, they're looking at all the feeders to the close. You can actually start looking at, okay, what's going on in accounts payable, and going back to our earlier conversation, if we have e-invoicing, I'm probably not going to have to worry about accruals so much.
Yeah.
And it's almost like look at your processes and determine which one you really need to focus on, and maybe have separate meetings with the stakeholders. So if payroll tends to be a mess and has last minute management adjustments, probably want to start having even one-on-one conversation again with the management of the process, and determine what they can start doing now to avoid, again, that last minute crunch.
Yeah. Okay. And I have a question around automation. Are you seeing any kind of AI in financial close yet?
Yes, actually looking at AI for things like the transaction, because really kind of taking a step back, there are 3 major steps to the close. One is transaction accumulation.
Yeah.
The second one is consolidation. And the third piece, of course, is the final mile, which is reporting.
Right.
And where AI comes into play is looking at trend analysis from one quarter or 1 month to another to start to highlight anomalies.
Okay.
And there are, again, algorithms that you can build with bots that say, okay, here's my, looking at all 3 phases: transaction accumulation, close and consolidation, and final mile. Particularly in transaction accumulation, you can go in and identify anomalies by using specific bots.
Yeah.
And they would highlight, okay, maybe even in payables, maybe this vendor or supplier was paid some huge amount that is totally out of their norm, and we should maybe take a look at that.
Yeah.
And again, that's a process you can start looking at now. Go back and look at payment information and procure to pay, and see if there are anomalies, and start addressing them, again, early December. And the other place bots can be used is looking at account balances. So looking at, transactions is one piece, but looking at account balances to also look at fluctuations and determine if some of the key general ledger balances are out of whack.
Okay.
And, where you can actually start focusing now. If you should have a zero balance cash account and you haven't, for quite a few quarters or even a few months, you want to go back and take a look at that.
Yeah.
And that work used to be done all manually, again, on spreadsheets. It is, again, it's still done on spreadsheets at many companies, but having bots, lined up that connect right to your ERP to do that analysis is really a very efficient and good best practice to look at.
Okay. Have you seen any of this in practice yet, or is it still really early days?
It's early days, and what's interesting, if I look at the evolution of automation and digitizing processes, it started as, okay, what can we outsource and what can we bring in into a shared service center, either one or both, and now it's, okay, what can we digitize? And the close and process really kind of is still a stepchild. I'm very familiar with a lot of the automation tools out there, and when I look at them, they're really very interesting. And again, the appeal is, look at smaller companies that may not have the budget and actually the use of technology for large ERP systems. But basically, the close process has sort of been a stepchild again in the evolution of automation, because it's also held so close to the vest, and there's a risk of, okay, we're going to close the books incorrectly, and if we're a public company, we're going to have a fine and not pass Sarbanes-Oxley and so on and so forth. But as you start to peel back the onion of all financial processes, I think close is starting to really be under the spotlight. It's one of those pain points that people don't want to talk about, but I think they're starting to. So that's why we're seeing some good automation in that area.
Well, it's interesting because, to think about it, I would think the financial close is something that, and I wanted to talk about it, not just because it's the end of the year, but as you say, it's the opportunity to consolidate and also to figure out if there's any, things like, as you say, duplicate payments, any issues in finance that we can address and rectify before we close the books. And, I suppose the idea, of course, that whatever comes out of that is what you're going to report to the markets and shareholders, right? So having this process kind of tight, I would think would be kind of something you want to do out of the blocks. And that, I suppose that kind of brings me on to the next part, AI and technology automating a lot of things, but, you've got a very strong audit background. How efficient is the process at the moment? Do you see a lot of leakage? And is that leakage, we talk about things like being material, and we hope, of course, that things aren't that bad, that they are a material weakness. But, do you see a lot of leakage? Do you see a lot of weaknesses in the close? Is that a fairly standard thing, that companies are just losing money because of poor practice?
Yeah, I think what's helped public companies tremendously is Sarbanes-Oxley.
Right.
And, again, if we think about the three pillars of a close, they're actually public companies are needing to report the state of their internal controls for Sarbanes-Oxley 404 along with their fiscal close. Yeah. So there's usually an internal controls team that does that, separate from internal audit, because internal audit has to maintain the independence. But I think that what companies do is with lack of resources, that's another big issue. They just, are in such a hurry to get through a closing process that they really don't go back and make the improvements. Right. And I think that, again, it's really not, the accounting standards are in place, of course, but again, how you get to the reporting process is sometimes a journey, shall we say, because a lot of the reports are done on spreadsheets, and they don't have, reporting tools. And I've heard that, okay, ERP systems aren't giving us the reports we need to see. And again, it's a lot of a resource challenge, and also training, because people might have these wonderful tools at their fingertips, but they don't know how to use them. Okay. And that's, again, a real challenge.
And that's standard. That's fairly standard, because as you say, you take for granted that large organizations are using Oracle, SAP, whatever. And there's an understanding that with that level of investment, at the very least, the reporting coming out the other end should be pretty accurate, I would say. But what you're saying is that's often not the case, and it's people just don't know how to use it in order to get the report that management are asking for. Is that the issue?
Yeah, I think the real issue is if you kind of peel back the onion on the close, and I had a chance to actually do that with a client, a very large government consulting company, was just having a terrible time closing the books. Right. And the other factors to look at, of course, are the internal and external reporting process, and also tying in things like, okay, how much does budget analysis and forecast analysis impact your close? Yeah. And those are usually, of course, owned by the business process owners. And, again, if you look at what can I take out of the close, it's probably some of that analysis and kind of divert it to another department. But if we go to this project that I had actually it was a pleasure to work with this organization, because they wanted recommendations on, okay, let's go way back to transaction accumulation and see what we can do to make the process more efficient. So what we did was I determined that they had 300 cost centers in this one organization, and a lot of them weren't being used. And you still have to do reconciliations and reviews of all these cost centers. Each one needs to have a budget and forecast. So we actually consolidated and alleviated a lot of these cost centers. And then we looked at the process flow, and we determined that there were a lot of last-minute journal entries that could have been avoided. Yeah. So one step was cleaning up cost centers, and we actually looked at their chart of accounts, which are basically the building blocks for the close and the financial architecture, if you will. So we determined that there were some cost centers that were redundant and some accounts that weren't being properly used.
Right.
And we were able to work with the organization and suggest that they have a team, again, focused on the close, but for forecast and budgeting, they really needed to look at a rolling forecast, which is where you're always looking at your actuals. Yeah. And again, it's kind of chicken and the egg. If the close in process is sound and the reporting is sound, your actuals and forecast results are going to be in good shape as well.
Yeah, makes sense. Let's I wanted to move on, because with your audit background, obviously, we've talked about the opportunity of getting things right, but you've also had some experience with where things have gone really wrong. And we talked before about WorldCom and what had happened there back in the days that really led us to Sarbanes-Oxley. So you thought to your time there, you weren't involved in the WorldCom scandal, but you were there after the fact, as it were.
Yes. Mm-hmm. Yeah. It was very interesting, I guess, from a career perspective. It was, probably one of the best moves I ever made. I was actually personally recruited by the new CEO that took over from Bernie Ebbers. Michael Kapalis had been the CEO at Compaq prior to being the CIO. And he knew my background in internal controls and what I had done, of course, at Compaq. And I was recruited to come up to the Washington, D.C. area where WorldCom, a branch of WorldCom, was located. Their headquarters, of course, were in Clinton, Mississippi, but after the fraud and the scandal, they were pretty much all in Ashburn, Virginia. Okay. And what we had to do is kind of, the work was just so daunting. We had to just divide it all up. Right. And a couple of things were going on. Because of the bankruptcy, we had to report audit results to a court monitor. Right. We also had to report audit results to and audit progress to our external auditors. And then we had so many audit reports from internal audit, we had to report those. So there's an awful lot of reporting on how things are being fixed.
Right.
The other thing that needed to happen was we had to restate 2 years of financial statements. As you know, the accounting was just wrong.
Yeah.
Revenue was not reported properly, and we decided that, rather than just clean house and fire everybody in finance, let's get them trained properly.
Okay.
So we brought in Deloitte and did all this really kind of basic accounting training so that everyone was kind of on the same page for the right way to look at revenue accounting, of course, and least cost routing accounting, in the telco industry. And we went through probably about 6 months of that. While this was all happening, we had to rebuild corporate governance. And that was putting in things like, as I mentioned earlier, delegation of authority, segregation of duties, policies, and actually making sure that the boards were set up correctly, the independent boards for audit committees and also salary committees. And we also had to look at, okay, how do we fix the ethics, the lack of ethics in the old company. So a lot of that was embedded into the corporate governance change, and we worked a lot with, my team and I worked a lot with the corporate secretary to make sure that all this progress was reported right to the board of directors.
Yeah.
So the only way, Louis, we got it all fixed was to have the support of the board of directors as well as the CEO and CFO.
Yeah.
And they paid so much attention to this, of course, because we wanted to fix the company that they pretty much, meaning the board, received a report at every board meeting, which was quarterly, and the CEO, CFO, controller received status reports weekly on how everything was coming together. So as you can imagine, it took a fair amount of project management and an awful lot of time and quite a few PowerPoint slides to get everybody trained on what we were trying to do. So communication was a huge thing, but I think having the support of the C-suite as well as the board really helped it all happen. And we got finished with everything in 2 years.
Wow. Okay. And it sounds like to me there were really two things. There was deliberate fraud, but it also sounds like we having to go back to basics. That maybe it was because things were so inefficient that fraud was able to happen. Would you agree with that statement?
Yeah, and another really big factor, there was coercion. The controller and CFO were basically giving direction to some of the accountants to cook the books and do improper entries. Okay. So that was one major problem. And the other problem was there were so many legacy systems, because the history of WorldCom was that Bernie Ebbers, the prior CEO, was buying all these telecom companies. And of course, they came with their own system and their own management and their own business processes. And doing consolidations and combining processes never happened. And we had really separate ways of looking at accounts payable even, and certainly revenue recognition. And with all these different systems, it pretty much was a quagmire of again, trying to figure out what are the true numbers. Yeah. So because of that problem, a lot of the sins of the past, if you will, were able to be hidden, because there was really no one good place where you could get a decent look at financial results. Right. There were also no policies and procedures. There were a couple of manuals hanging around, but they hadn't seen the light of day in years. Yeah. And so that's part of your conversation or your comment about the basics. Yeah. So the basics not being in place, the lack of ethics, and also the system integration problems were probably the three main factors for the state of WorldCom.
I imagine, because like you say, I think without policies, you talk about ethics, but also what it does to culture.
Right. Mm-hmm.
I imagine by the time you go in, would you say that because like you say, you had a choice whether to fire everybody or work with them. But I can imagine the culture then at that point was one based on fear. I suppose seeing people, get indicted and so on. A lot of people that you were working with, was there fear, or what was the culture like when you were working with them over those 2 years?
Yeah, I mean, it was really a kind of a tough situation because I actually started in beginning of June of 2003, and quite a few of the finance people that were involved in we call them, shenanigans, where basically the fraud were fired.
Yeah.
So walking into the building, of course I didn't see that during my interview. It was pretty much a ghost town because there were so many empty offices because people were dismissed.
Yeah.
So there was talking about fear, there was again, am I going to be next? Particularly the folks that have been at WorldCom, MCI for a while. Of course, WorldCom became MCI. And then as we started fixing some of the things I mentioned earlier, there was sort of a renewal where the folks that had been there, 5-10 years, that weren't involved in the fraud, wanted to get on the bandwagon. They wanted to attend all the meetings we had on, as an example, the changes we needed for segregation of duties to make sure we had good system controls. And so we'd get all these, I used to call them meeting groupies, that show up in these meetings and wanted to be part of the change.
Right.
And so we were able to enlist a lot of individuals to help us with the governance, the Sarbanes-Oxley effort, as well as building some stability and basics and building blocks back into the company.
Yeah. Yeah, amazing. And of course, out of all of this, and at that time came Sarbanes-Oxley. There's been some talk recently about deregulation and about the pressure and the cost of dealing with SOX. I would guess that you're probably an advocate for SOX. Do you think the opposite, that we need more of it, or do you think there's too much? What's your current stance on Sarbanes-Oxley?
Yeah, Sarbanes-Oxley was actually implemented in July of 2002, and companies that had good controls and were paying attention to sound business practices and were looking at controls at least quarterly were in pretty good shape for Sarbanes-Oxley. And going back to the early days, the first 5 years or so of Sarbanes, I would say that large companies spent as much as $100 million to bring in external auditors and all these different teams to help them analyze their controls. And as an example, at WorldCom, we tested over 10,000 controls, and that includes documenting and testing manually on spreadsheets. And a lot of that was due to all the different systems we had. We had a plethora of controls because we had so many different disparate systems.
Yeah.
And I believe with Sarbanes-Oxley, if you are looking at internal controls, again, in a self-assessment manner on a regular basis, you're actually paying attention to results and correcting results. Sarbanes-Oxley shouldn't even be a worry. It should just be another step in the process.
Yeah.
And if you're looking at, again, good risk analysis, and you're looking at the right controls, then again, you're going to be in good shape at the end of the year.
Yeah.
And what I've actually been looking at is how do we focus on risk-based controls rather than just documenting an internal control for the sake of the control.
Yeah.
You've got to really look at dissecting the whole process to make sure that the controls are properly addressing the risk.
Yeah.
So in my internal controls toolkit, I've got all these different matrices that present the control and the risk that's being mitigated. I've also done a lot of work with NACHA, the Electronic Payment Association, and we did a payment risk management manual that is an internal manual for NACHA and their clients. And we kind of turned it around. We said, okay, let's look at all the risks within the payment process.
Yeah.
And then let's identify all the controls. So we sort of flipped it a little bit. And we also took a bigger picture look at where is the biggest risk in the payment process.
Yeah.
So I think doing things like that, and also really making sure that your internal controls process is in good shape, shouldn't even be an issue. And I think that 404 is a good process. Digital was doing something called balance sheet review, where we looked at the account reconciliations that I mentioned earlier, also the state of an organization's internal controls. And when HP bought or Compaq bought DEC, and of course HP bought Compaq, those processes still stayed in place.
Oh, great.
And again, I think that was done in the late 80s even, and so Sarbanes-Oxley wasn't a big deal. I think just doing the new reporting and the roll-ups and everything else, just taking a different look at the process.
Yeah.
But I think Sarbanes-Oxley is a good thing. I do think that when the law first came out, we didn't have any guidance. And so we used the COSO framework, Council of Supporting Organizations of the Treadway Commission. We used the old COSO framework as a basis. Well, that's been around since the late 80s, so it's nothing new.
Yeah.
And I think what Sarbanes-Oxley or what the regulators can do is come up with some standards, and come up with best practices, or share those on how companies should be looking at their internal controls.
Yeah. Is that because we started off talking about the fast close toolkit, but you, as you say, you have the internal controls toolkit. Is that why you wrote that book? Was to try and assemble some kind of standard?
Yes, I wanted to communicate the standards of internal controls that are available. Again, not just for financial processes, but for security and information technology. The Employee Health and Safety Organization as examples of ethics. How do you determine if your ethics are sound? What can you look at? And there is a series of internal controls called entity level controls, which look at the efficiency or the effectiveness of ethics program and board committees and things like that.
Yeah.
And what I wanted to do is share the content that I developed over the years and certainly had available for a general audience. And the Accounting Today publication actually gave me a pretty good review and said it was a good desk manual for smaller companies.
Yeah.
Which is absolutely true. You can use the internal controls toolkit to actually run your entire company and use it to either enhance your controls or implement some new practices.
Yeah. And the internal controls toolkit, that book is available. That came out in June, July of 2000.
Yes, that was actually shipped in the July timeframe.
Okay. And the fast close toolkit you've just released, is that right?
Yes, yep.
Yeah.
So I just talked to my editor and it was actually starting to ship last week. So
right. Okay. And we've talked before, you've got a few more on the way coming 2020. And you've done all of these through Wiley, right?
Yes, yep, through Wiley F&A. Mm-hmm.
And so, if I'm right, you've got the AP toolkit and the controllers toolkit to come?
Yes, the controllers toolkit is due, first draft is due in May, actually May 15th. And the AP toolkit is due in late August of 2020.
Okay.
Now, that's when I get them the first draft, and the process is that we go back and forth with editing. I actually get a link to the editing tool where I can see. It's really a pretty swift process. I get to look at layouts as well as how just the raw text looks. Yeah. And looking at the layouts is really important because you can see if you've got tables going the wrong way or things that just don't appear correctly on a page.
Yeah.
Editing process usually takes a couple of weeks, and then of course you go back and forth quite a few times with questions and suggestions. And I actually got the internal controls toolkit completed in end of January 2019.
Yeah.
And again, it's about 6 months. to get everything published.
Excellent. So, so a good series to come. I'll post a link to both of those current books. And if people are interested in learning more or learning more about working with you, where can they find you? What's the best way to get hold of you?
Yes, I do have a website that's in process of being updated, and the website is Doxey Incorporated, DOXEY Inc. and .com, and they can actually get a look at some of the things that the services that I provide, educational services as well as consulting.
Okay.
And they can certainly reach out to me directly. And my website actually connects right to an email, but they can actually reach out to me directly if they'd like.
Right. Okay. So if I'm in need of reviewing internal controls, financial close, AP automation, that kind of thing, then I should come and talk to you, obviously.
Oh yeah. Be glad to help.
And it's been a real pleasure to talk to you. I want to thank you very much for taking the time to talk with me today. This is the first podcast, and I really wanted to start at the end, as we are at the end of 2019.
Yeah, and I will mention for any Oracle customers, I have a lot of postings out on Customer Connect, really that summarize a lot of the key points we talked about today.
Yeah.
And I really thank Louis for the opportunity to do this podcast and look forward to doing some more in the future.